Have you ever wondered how professional traders like myself stay profitable in the Forex markets even when we have losing trades? Well, the secret to this is actually our risk to reward ratio on the positions we place. Let's say, for example, we risk $10 on a trade with a potential return to make $20. That gives us a risk to reward ratio of a 1 to 2. So this means even if we only win 50% of our trades, we are still going to be profitable. As a rule of thumb for myself, I ensure that every position I place in the Forex markets gives me a risk to reward ratio of at least a 1 to 2. This allows me to stay ahead in the game and offers me the potential to make some really good returns. Now, what I'm going to do is I'm going to show you guys a little graph, and you can see here that with a 40% win rate, as long as your risk to reward ratios for every trade that you placed was a 1 to 2, you are going to be profitable. Now, with a 30% win rate, as long as your risk to reward ratios were a 1 to 3, you're going to be profitable. So it's very important that the trades you are placing have positive risk to reward ratios. Now, you might be wondering, well, how do we have positive risk to reward ratios with the positions we place? Well, this all comes in play with the strategy that you have. Now, thanks to my style of trading, I am able to have very tight stop losses, but very large take profits, which allow me to have really good risk to reward ratios. I would always ensure that any trade you do place has a risk to reward ratio of at least a 1 to 2. So just to give some quick examples on how risk to reward ratios work, you can see on screen we have a short position here. Our take profit is 100 pips, and that's because our take profit target is 100 pips away from our entry point. Our stop loss is 20 pips away from our entry point. So this gives us a 1 to 5 risk to reward ratio because our stop loss is 20 pips, but our take profit is 5 times larger than our stop loss. So whatever we're risking and allowing ourselves to lose with the potential that price doesn't go our way, we could potentially make 5 times that amount should our take profit be achieved. Now, let's say that we increase our stop loss to 25 pips and we are risking 1% of our equity. Our risk to reward ratio changes because our stop loss is now 25 pips. 25 goes into 100, which is our take profit, 4 times. So this gives us a 1 to 4 risk to reward ratio. So if we're risking 1%, we're potentially looking to gain back 4%. So if it was $10, we're potentially looking to gain back $40. Let's say our stop loss changes even more so. We now have a 50 pip stop loss. That gives us that 1 to 2 risk to reward ratio. Whatever we're risking with our stop loss being set there, we are looking to gain back double that with a take profit of 100 pips. Your risk to reward ratio is going to be different with every trade that you place, and this depends on your entry and where you see price taking you with the trades that you are placing. So if you are wanting to learn a strategy that allows you to have brilliant risk to reward returns on your trades, then go ahead and check out some of our other videos. I want to know what your risk to reward ratios are on your trades. Leave them in the comments below.